Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us this afternoon, we have Steven Ehrlich, Director of Research of Digital Assets over at Forbes Crypto. We're going to get a high-level overview of the infrastructure bill and how it is impacting the crypto space. Steven, it's great to see you as always. And of course, this has been the topic of conversation over the past week, and the infrastructure bill and how it could potentially impact the crypto space. Give us a high-level overview of what did or didn't happen.
Yeah, thanks, Jill. Thanks for having me. So the infrastructure bill, it really is kind of amazing in a way that a $1 trillion bipartisan bill was held up in some regards because of a debate over crypto. What basically happened is that there was a clause in the bill to raise $28 billion over the course of several years from more efficiently taxing crypto transactions to pay for all these new roads and bridges and highways and so on and so forth. The problem with the language, though, is that it had a very vague and expansive definition of of the term broker as it pertains to sort of IRS tax code, where it could unintentionally encumber everybody from Bitcoin miners to software developers into actually having to send out 1099s to crypto users and traders, which not only is, I think, against the decentralized spirit of crypto, but many of these companies and individuals don't have the means to get this information, get tax IDs, get addresses. They don't have it. It's how Bitcoin and crypto are designed. So a group of senators that sort of have a better understanding of crypto, led by Pat Toomey, Ron Wyden from Oregon, and Cynthia Lummis from Wyoming, put together their own amendment to the bill that would more tailor the reporting requirements to operators such as Coinbase that everyone kind of expects to, which is pretty well to Coinbase, which is non-controversial, so to speak. Unfortunately, due to a lot of Senate procedural rules, the amendment did not make it into the final version of the bill that was voted on by the Senate, so it did pass. And now we're going to look to the House to see if, when they create their own version of the bill that needs to then be reconciled with the Senate before it goes to President Biden for signature and becoming law, if they're going to be able to sort of change it so that it better reflects the spirit of what the legislation was intended to do as pertains to crypto taxation. There's one small sort of shine of light, though, that's worth mentioning. This legislation, like any type of legislation, once it gets passed, then it gets sent down to whatever the enforcement agency is, or the regulator. In this case, it's the Treasury, it's the IRS. And there was a report from Bloomberg over, I think on last Friday, suggesting that the IRS, when they create their actual regulations that the operators will have to comply with, are going to exempt minors and some of these other individuals that really should not be part of this.
So, Steven, let's play a little bit of devil's advocate here and to understand the situation a bit better. In the United States, at least anyway, you do have to pay taxes where you profit because the crypto ecosystem is run off the premise of decentralization. Can you understand why the legislators might be looking to tax at least some part of the ecosystem, because there is profit being made somewhere?
Yeah, absolutely. And I don't think it's a very controversial issue that crypto should be taxed. I mean, I send out reports to subscribers and readers all the time about how to appropriately file your taxes when it comes to capital gains, tax loss harvesting. There's a number of third-party integration software providers that will actually help crypto traders and investors sort of download all their transactions from Coinbase or any exchange they use, so they understand what those obligations are. That part of it's not confrontational at all. The idea is that you don't want to have such onerous taxation requirements that in some ways it strangles this industry as it's starting to grow. And one of the more ironic parts about this whole debate is the fact that this happened a couple of months after China more or less exiled all of its miners out of the country and forced them to repopulate around the world, many of which are coming to the US. So this seemed like an own goal in some regards at the worst possible time.
Right, and in the same token, pardon the pun there, it almost seems to legitimize it once you have legislators looking to tax it.
Yeah, absolutely. I mean, the idea that, I mean, aside from just legislators really showing a deeper knowledge of crypto than I think most people appreciated. I mean, we saw op-eds and articles in the Washington Post, in the Wall Street Journal, in the New York Times. I mean, at Forbes, we covered it extensively. I mean, this really was a coming of age moment for crypto. I mean, the fact that this issue held up the bill and caused so much debate is notable in and of its own right. That said, I think most people in industry, if you ask them honestly, would prefer to have more dedicated legislation pertaining to crypto that goes through the process of fact-finding and witness testimony and et cetera before unintentionally, I think, throwing something in at the back end of a bill without truly appreciating the consequences that could transpire from it.
And Stephen, to wrap up here, what's your outlook going forward? Do you expect any sort of legislation to get passed in the near term, or are they going back to the drawing table here?
The Congress, I mean, they've been trying for a while to figure out the right way to regulate this space. I mean, Elizabeth Warren on the Financial Relations Committee, Financial Services Committee. I mean, she tasked the SEC Chair Gary Gensler to sort of help her figure out the puzzle pieces between the SEC, the CFTC, various other regulators, how they fit, how they should work together to tax this, to regulate this emerging space. I mean, Gensler actually gave a speech about a week ago at the Aspen Institute where he said that he does not have enough power to regulate the space in Congress, and he needs Congress to authorize him, give him more authorities, so to speak. This is an area that's not necessarily going to be going away anytime soon. When it comes to infrastructure, we're going to wait till the fall to see what the House does when it takes up its side of the bill. But in the meantime, I think we're all going to look to regulators and enforcement agencies to see how they try to sort of stem this, or I guess nudge this movement one way or another based on how they are regulating the space.
All right, Stephen, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill. Appreciate it.